Hi, good evening, everyone. Welcome back to the channel. Oh, here we go. Here's our full screen. So in this video, I want to discuss YieldMax and which YieldMax funds are actually sustainable in a bear market, because that's something we increasingly need to look into now. We've seen a lot of the funds drop, and right now, ironically, and this discussion came up in my Discord earlier, it looks like the gold fund might be the most stable right now, which, gold typically in a downturn, gold is a stable asset. So let me let Discord know that I'm going live now. Let me do this here really quick. Okay, it's been a while. So, apologies for that. Just been traveling a lot and stuff. We have a familiar face here. Welcome, welcome. Okay, so let's go look at all of our funds and see how we're doing. Okay, so let's a lot of our dividends I haven't really even been tracking. A lot of the dividends are just kind of like completely in the crapper. So we can, for starters, we can go over our last dividends from last week. Um, that's actually on the X page here. So let's do this here. Okay. All right. So let's. Okay. Sorry, I'm kind of fumbling around here. Let's go over this first. Okay. So we've got, as of March 19th, we had SNOY 81 cents, 5E 71 cents, feet 69 cents, Crash 64 cents, TSMY 57.7, rounds up to 58, LFGY 47 cents, Tesla was down to 46 cents. So that one's falling. So some of you all that are, in other discords that are like in the 5K club or the 10K club, let's kind of reassess where you are right now. I doubt you were where you thought you were. I know for mine have certainly been cut. So let's see, my Tesla dividend for, let's see here, TSLY. Let's see where. Um, oh, there it is. So it was 46 cents. So it was like $1,400. Okay, so let's go over here, and this was as of February 1st. This was before things started really downturning. Of course, I think I went over this one already. This was a pretty good argument back then, but times change very fast. Okay, it's annoying that there's not like a one uniform place to go for the performance of these funds. So let's go to Seeking Alpha, and we'll just look at a few of them here. I'd like to get some interactive discussion going here. If you all want me to look up a certain fund, like the gold fund, I don't know the ticker symbol offhand. Um, so let's go here. We'll just start with TSLY. Now, my concern with these funds, and it's really being exacerbated by a downturning market, because I'm a realist. I'm not like a cheerleader for any funds in particular, even individual stocks, even Nvidia. I'll tell you, when, if I think it's not going to be a good buy at some point. Let's compare Tesla to the S&P 500. So what do you notice in terms of sheer price return over the past year? They've moved in exactly opposite directions. 44% in the positive for Tesla stock, 49% in the negative for Tesla. If we go year to date, once again, so we've seen Tesla down 38%, Tesla 43%. So you're actually getting more of the downside for this one. Even though we know we're supposed to get all of the downside, but we're actually getting more than all of the downside. So if we go to total return, it's slightly outperforming the underlying. But if we go here, total return, we're still 30% less, because as we know, with these funds, we're not able to really capture much of the upside at all. So while Tesla, and God, at the end of December, everything was looking really good. Tesla was up 178% at this point, and Tesla was only up 96%. So The concerning thing for those of us that have really been holding the bag for a while with this one is that while Tesla had such a huge run up here towards the end of the year, and it's pretty much given it all back, of course. See, we went from being up 92% to being flat, basically. Um, but where is the let's see here. Prices. Where do I see the prices on the chart? I'm kind of blanking out here. Let's go to charting price. Where is the I don't want to see percentages on this axis here. I want to see price. Um, what is this? In thousands. Oh, no, forget this. Here we go. This is closer to what we want here. Okay, remove this one. We got these two. Okay, so, okay, here is the concerning thing here. So if we go back a year, Tesla was at like 173, Tesla was at 1572. Since then, I want you to focus on the end of October. Okay, so the case study is Tesla in particular. Tesla was at 217 right before the election. All of a sudden, after the election, Tesla shot way up. Okay, but for this massive run up here, we went from 217 to 480. We more than doubled in Tesla, and we barely saw any increase at all in Tesla. You see what I'm saying? We did go from we got up to like 1770, but see, we were at $11 here. So the stock almost doubled. Okay, so we'll say that's $6. The stock, it didn't almost double, it more than doubled. It went from 217 to 479. 217, so that's 262. So that's a more than doubling. So that's like what, 121%. And then Tesla went up 54%. 54% over the same time so we missed out on a lot of upside here. So then what would it take? It all depends on like how it runs up. So if because I honestly I thought, and I might be a little bit naive here, but I thought Tesla getting up to almost $500, I thought Tesla would recover back to what our cost basis was for it, especially for those of us that have been holding the bag since 2023. So then at this point, then what would it take? Would Tesla have to run up to $1,000 for us to get back to where we were? This is important. This is a dose of reality here. So let's do this here real quick. Let's go over all of the YieldMax funds that exist again. So let's go to the YieldMax site. YieldMax distribution schedule over here. We'll just go over a quick reminder here because I'm not even really following the dividends like I used to. They're not quite as exciting in this crazy market. We still have for target 12, April 1st, April Fool's Day. That could be fun. That's going to be our next declaration date for target 12. For A, B, C, and D, we are on the as of the 26th. We're going to be on to Group B with a payout date of March 28th. And then as far as the groups, this is where we are here. The biggest group by far is Group A. We now have Ulti paying weekly, QDTY, RDTY, SDTY, GPTY, LFGY, YMAX, and YMAX. That's 2, 4, 6, 8. So we've got 5 times 8 is 40. We've got 43 funds now. So I feel like in the last year, they've churned out so many funds. We've got like double what we had at one point because I've kind of been losing track. Okay, so this week we can expect, let's see here. I just got a new car yesterday, by the way. That was exciting. Group B is this week. So Group B is going to be NVDY, DIPS, FBY, GDXY, Babo, JPMO, MRNY, Palantir, and Maro. The GDXY, let's check that one out. Let's see here. Owning dips and selling puts against it on QQQ 100 days out, working very well. Cool. That might not be a bad idea. Oh, here's the gold one. So let's see. This one I want to say is the most stable. Let's take Tesla stock out of here for now. Year to date, yeah, we are certainly up year to date in just price return. Since inception, though, we are slightly down since last May. We're down, but not down as much as we are in an asset like Tesla. If we look at total return, let's go here. So total return is 9.65%. So Tesla's actually beating, well, this isn't apples to apples here. So let's make it apples to apples. May 21st, May 21st to, let's do this over here, March 23rd. Oh yeah, we're running circles around Tesla. That's like 4 times the return. But you can see Tesla at one point was up 78%. What did we end the year at, actually? This is an important metric. I never covered this. We ended the year, Tesla ended the year up 55%, actually. So that was a pretty good performance. But as you see, again, Tesla is a perfect example. It's a perfect microcosm of YieldMax as a whole because you're going to get a fraction of the upside and more than all of the downside. And typically the underlying is going to outperform. Now, GDXY, if we look at like gold miners ETF, hold on, not Barrett, gold, gold, ah, hmm. What's just gold? Maybe that's it. Let me see. Um, Pretty close. This gold, this Barrett gold, it's pretty close. Let's put up Tesla here. Tesla, God, at one point, Tesla was up 157% for the year. We ended up 116%. But now, year over, since last May 21st, Tesla by far is our best performing asset over that time. Let's throw in NVIDIA and NVDL just for the heck of it here. NVDL. Here we go. Not NVDL, I'm sorry. NVDY, the YieldMax one. By the way, I'm really liking the yield boost strategy with Granite shares. We got to keep a close eye on that. So wow, Tesla's beating NVIDIA over since May 21st. Let's see year to date here. NVIDIA's down, Tesla's way down. Over 1 year, Tesla's beating NVIDIA. How about that? Gold. Everything's positive though. So look at that one. NVIDIA and NVDY are pretty close in terms of total return. If we go back over like the maximum here, look at that NVIDIA. You see, that's the upside you're looking at in the underlying stock there. Tesla is down 19% in 3 years. Gold is down 15%. GDXY since inception, 9.65%. Tesla since inception is only down in total return 6.83%, despite paying out all these high dividends. So that's not terrible. I'm going to update all my spreadsheets one day and we'll go over all these. But as we can see, NVIDIA's return is double. Basically, yeah, isn't that's more than double the underlying? The underlying is more than double the return of the YieldMax fund. Okay, so that is that. So it looks like as far as most stable, it might be gold. Did I not share the screen I was on? I'm sorry. Here, this is what I was just covering. Okay, so yeah, NVIDIA is more than double its underlying YieldMax fund over the same time frame. Tesla down 19% in 3 years. Gold down 15%. GDXY is up. Tesla, like I said, not too bad for since inception. Not too bad for paying out such high dividends. So, all right, folks, that is going to do it. Thank you all for tuning in. Please remember to like, comment, and subscribe and join Discord, where we keep hashing all this out after hours, of course. And we will see you all in the next one. Take care. Bye.